Let's turn now to rates dropping ahead of tomorrow's CPI print. The yield on the benchmark 10-year Treasury closing back in on 4%. Economists expect consumer prices rose slightly more than they did in July, with an annualized rate just under 3%. We did see a surprise drop in wholesale prices, PPI, in August this morning. The PPI fell by 0.1%, while consensus estimates expected an increase. So that was a nice surprise. So companies may not be passing on increased costs here. Courtney, how do you feel about what we're going to get in the 10-year going to 4%? That's basically an April low.
Yeah, I mean, I think what we really need to see how CPI comes out tomorrow, because this was like a big surprise. I mean, theoretically, if this is a trend, you would actually see deflation, but I think it's way too soon to actually say that. So you need to see what this other data is going to come out to show what that trend is going to be. But I do think at this point, it is indicative that the rates probably are going to continue to come down here if you continue to get these kind of reports, and that is going to be a positive for the markets. But again, we want to see what the report comes out tomorrow.
I was surprised, actually, the market wasn't up more on this. I know there were some big Dow movers like Apple that took a lot of points, but for the whole thing, spiders, all of it, I'm surprised because the magnitude of that data was big. Now we'll have maybe
too big,
and maybe we'll see that something very different tomorrow. That could be a reason. But those auctions went very well. All of that, you have to think, if you were on the fence about the Fed cutting,
right?
This data is not completely flipped tomorrow. You have to think they must cut. And 2 or 3 weeks ago, that call for 50 basis points, I thought, all right, that's a little dramatic. That's, labor isn't weakening enough, and we still have inflation. And now both of those seem to be turning. So I'm surprised the market wasn't actually up more.